Thank you, able Director, Mr. Gishehi. Good morning, ladies and gentlemen. I echo the sentiments of our Executive Director. I would also say that it is a pleasure to be able to present these findings to the industry. The findings that would actually encompass the data that was collected by ACI and Research 8020. So this is more of an integrated report, and we'll be looking at what dynamics we've been able to see in the market since the last report, the last study was done in 2017. Mr. Gishui has taken us through the introduction, and therefore it is my pleasure to quickly just jump into the findings of this particular study. And as I said, this is a study that was conducted not many months ago. We have had data collection process taking place between June and September, and we were able to collect the reports, hence the dissemination. So you will notice that the structure of the report and the presentation is highlighted as per the objectives, just as Mr. Gishui has already taken us through the objectives of the study, which is mainly to look at how has the sector or how has bancassurance been able to evolve since the last 7 years or so when the first baseline study was done. It were used, and I think it is important to also mention that besides the data that was collected from both banks and insurance by ACI, we did also conduct desk research through, just looking at the sector and industry reports to understand what trends are there. Previous studies that have been conducted within the sector, other publications that are in the sector, also amongst the regulators. We also did in-depth interviews with bank assurance managers, our principal officers, the ICT managers and the strategy managers within these institutions, both banks and insurance companies. And we also did quantitative data collection where we interviewed the bank assurance agents, understanding that these are the primary contact persons when it comes to customers. It was very key also to understand, for example, what is the knowledge when it comes to elements to do with the regulations, elements to do with customer service and product knowledge. Besides that, we did a small mystery shopping amongst the bancassurance intermediaries, and you'll forgive me because I'll be using bancassurance intermediaries, banks, and agencies interchangeably because it's one and the same when it comes to the insurance, bancassurance business. So we did some mystery shopping where our agents could go to the banks on the bancassurance desks and reception and just pose like a normal customer to just gauge the level of service, including the product knowledge of the bancassurance agents. So ladies and gentlemen, main findings, and time allowing, we'll look at probably just the summary and maybe the recommendations. But key is the main findings. And we'll start by looking at how has this sector performed in terms of trends. Data largely driven by what was collected from amongst the players by ACI. And the most important point that we need to say at this particular juncture is that when you look at the numbers of how the industry has been able to grow from 2019 to 2023, we noticed that the overall insurance sector has actually recorded a very good, growth within this particular period. And we can actually say that total premiums were able to surge. The total premiums, when you look at the chart, you'll see it is indicated by the blue bar. We can see it was actually able to surge by almost 56.2%. Now, this, or rather Bancassurance, also registering tremendous growth. And indeed, unlike the insurance sector as a whole, we saw the bank assurance registering a very big growth or tremendous growth of 79.4% when you compare to the 56.2% of the overall industry growth. And for the bank assurance, this growth was largely driven by, of course, the non-life insurance sector, which actually recorded a 72.2%, followed by the 43.4% of the life insurance. So this is to say that just like the overall insurance sector, I think we have seen a very tremendous growth within the bank assurance, which is our core subject today, that says or shows that indeed we are on the right track when we try to trace how we've been able to perform for the past 5 or so years. When you look now at the market share for the bank assurance, we noted that in 2017 it was about 80% average, but to date, as we speak, by 2023, the market share for the bank assurance compared to the total insurance industry had grown up to about 10%, which is to say that we are actually on the right path when we try to look at how we've been able to perform for the past 5 or so years. If that is anything to go by, if we are to compare also way back into the 2017 non-life contributed. Again, by looking at the non-life contribution, definitely we've seen that it's a growth when you look at this particular chart, the one on your left, on my right, or rather on my left, the blue, we can actually see there was growth, and with growth moving from 10 billion Kenyan shillings to 18 billion Kenyan shillings, and we've seen the percentages in terms of how the non-life insurance had actually contributed to overall bank assurance market. And we can also see that these figures are also, represented by how also the top, or rather the various players within the sector have been able to contribute in this particular area. We have seen motor, fire, and medical, as well as theft policies contributing largely to this particular sector. And you can actually see those numbers have been growing year in, year out when you compare since 2019 to the current year, of, rather to the previous year of 2023, which is actually the latest data that we have. But I wish to also mention that there is a very big opportunity when it comes to marine policy, because we have seen that it also registered quite significant growth of over 100% in terms of growth when you compare 2019 and 2023. So it means that the market has a very big opportunity to look into this particular product, considering the rate that we've seen it growing, and it will be key to also monitor to see how in the next few years to come, this particular product is actually doing in the market. Before coming together, each party have a mission or have a goal. And when you look, starting with geographic expansion, we notice that within the geographic expansion, what we noted from the interviews with the strategy managers, the insurance managers, and even the bank assurance managers is that the banks are more dedicated establishing dedicated bank assurance sections with specialized staff, and they emphasize more on digital expansion, while the insurance companies are leveraging on targeting about 30% of the banks so that they can leverage on their bank networks or development. Insurance companies enhance staff skills through regular trainings and external sponsorship, while banks focus on trainings that are being provided and offered by mainly these insurance partners, together with AKID, who are coordinators when it comes to these elements. The strategic goal of customer service enhancement and product diversification. We see integration of technology and research-driven product innovation or diversification that aim to improve efficiencies, responsiveness, and customer centricity or customer satisfaction. And this is development. Insurance companies enhance staff skills through regular trainings and external sponsorship, while banks focus on trainings that are being provided and offered by mainly these insurance partners, together with AKID, who are coordinators when it comes to these elements. The strategic goal of customer service enhancement and product diversification. We see integration of technology and research-driven product innovation or diversification that aim to improve efficiencies, responsiveness, and customer centricity or customer satisfaction. And this is access of bank assurance products. And again, this particular staff were able to say, when they were asked at what are some of the strategies you would attribute to the success of the uptake of the bank assurance products. The key strategies they mentioned was a strategy on staff training and expertise, followed by customer relationship management and customer education and awareness. So this is just to say that the trainings, in as much as we look how the bank assurance sector has been able to grow with all the initiatives that has been put in place, including trainings on product knowledge and the training of the key players within the industry, it is to say that from the eye or from that focus on the bank assurance agents, then these strategies are actually paying off, particularly on the areas of trainings. We can say Kenya, we are on the right track, and it's more of just enhancing the current, strategies that we put in place when it comes to business objectives to ensure that we are able to catch up with the leading markets. Ladies and gentlemen, for claims processing, we are doing it in such a way that customers don't need to come to the branch. They just go in and fill in the application forms and just upload them. That is online. they reach to us to process. So we were looking to shorten the customer journeys. We are currently looking at integrations with underwriters. We are looking at a system upgrade. It's just some of the testimonies to show that the sector is actually, embracing technology to ensure that they are improving the customer experience and the customer journeys when it comes to matters claims operations. Has this technology had impact? Yes. We actually asked just to gauge to what level technology has had impact by asking, the bancassurance some of the question. And one of the questions is, we asked, in light of the integration of technology in bancassurance operations, what would you say is the extent of technology impact when it comes to bancassurance business on the following key areas? And we looked at customer relationship management, claims processing, and product distribution, which are the key three operational areas. And you can actually see more than 60% of the bancassurance agents were able to say that these areas have actually seen a good impact when it comes to technology integration. We can say Kenya, we are on the right track, and it's more of just enhancing the current strategies that we put in place when it comes to business objectives to ensure that we are able to catch up with the leading markets. Ladies and gentlemen, they had a regulation, and it was very key to say how has been the journey of regulatory framework in Kenya when it comes to matters bancassurance. And from this particular chart, we can see we have really come from far as an industry. And not long ago, bancassurance was non-existent in Kenya. It only started peaking and coming to limelight post 2000, where we saw some discussions around bancassurance coming up, and of course during this particular time we had some players coming into informal arrangements. But then up to November, I think this is where we first saw some clear guidelines of the industry from the regulator, IRA. We were able to establish that the regulatory changes has had both pros and cons from the feedback that we received from the player representatives that we were able to interview. And one of the positive implications or impact was there is now fair competition. Customers are now free to make the choices they want to get in terms of products and which insurer to go for, and also enhance protection. But the flip side is that I think we had already mentioned the element of cost implications and the stringent or the complexities that comes with the regulatory hurdles. And again, to just cement that, we see from my top right corner a bank strategy manager saying that the product that you give us or the solutions that you give us has to be fit for our customers. That is one of the expectations that we actually don't negotiate. Another bank officer, the very first statement says, we expect that they will be good enough for the customers and for us. Reputation when it comes to settlement of claims. Probably one more from an insurance manager, bottom left. What we also expanded at an impressive rate of 73.8%. Of course, comparing life insurance and the general, which is non-life, we know generally the non-life takes the bigger share. But when you look at how the growth has been, I think the life insurance segment had the highest growth rate, which was followed by the non-life at 43.4%. What about bancassurance? Again, just like we have also seen is that unlike the growth that we've been able to see, I think we could be facing some pressures, especially when it comes to matters of profitability. Because indeed premiums grew, particularly within the general or the non-insurance sector. But you can also see that if I was to look at that particular chart, you can also see actually see the total, the blue bar, which is actually the total claims growing tremendously from 2019 to 2023. But you also notice that in the same space, the premiums have also grown. However, that growth has ended up impacting the loss ratio, which means that there needs to be a troubleshooting within the industry or within the sector to see how can we then ensure that the growth that we're seeing in terms of premiums can actually be able to relate to the profitability by looking at how claims can be addressed, which we actually saw had the highest growth rate in terms of market share within the bancassurance, moved from 8.7 billion Kenyan shillings to 2019 to 16.5 billion Kenyan shillings. This is what we were seeing. It actually grew by almost, I think 77% in terms of the growth rate. And again, you can actually see that the top five agencies or insurance intermediaries, bank insurance intermediaries, contributed significantly to that particular growth by contributing over 1 billion Kenyan shillings. Definitely the credit and mortgage, and I'm informed this is mainly contributed by the insurance that we, or rather the loaners, or rather the loans, the proceeds that comes from the insurance that is attached to the loans. We see that the credit and mortgage is the largest contributor to the life insurance, or rather the life, but definitely the life insurance within the bancassurance sector, followed by the individual life. And of course, we have got other products that are also, contributing significantly to that, which includes the group life and last expense, among others. But I think it is important to say that when you look at the trends, you will notice that from 2019, these numbers have been growing and growing to the time that we are in 2023, with definitely the mortgage product recording quite significant growth numbers in that respect. Customer relationship retention and strategic goals. This goal is largely being implemented by insurance firms and bancassurance partners or agencies. And it's aimed at providing, favorable product pricing, enhancing service delivery through client feedback, improving convenience, and maintaining open communication channels. And we'll be seeing how you look at the first comment, we see one of the bank principal officers saying that our strategy has been to come up with a training and a capacity building for the rest of the staff so that you are a branch manager or you are a cashier, you're a teller, you're a manager, but you are also able to comfortably distribute insurance products and services. It goes on to say that we have designed a training program so that we have a pool of universal bankers who can comfortably settle or rather sell banking solutions alongside the insurance solutions. Saying quarterly, which is to say that indeed it echoes what we have seen from the sentiments provided by the bank assurance managers, insurance managers, to say that trainings are being done, on a regular basis. But then when we ask them on a scale of 1 to 10 to rate how they could rate the performance, on these trainings and the understanding of these particular trainings, they were able to overwhelmingly say that when it comes to matters of customer relationship management, product knowledge, sales techniques, financial literacy, and regulatory compliance knowledge, they could actually be able to rate themselves high, with the highest being a 9.1 over 10 for the customer relationship management knowledge. And to some extent, just getting the feedback of the bank assurance agents. When it comes to technology and bank assurance operations, we note that the integration of technology is taken with high regard and is actually essential for bank assurance players to be able to thrive within this particular market. And there are three key areas that this particular integration has been, focusing on customer relationship management, product diversification or distribution, as well as claims processing. The industry is actually adapting technology in ensuring that that technology is able to, ensure seamless operational excellence when it comes to providing services to the customers. And in terms of just agreeing on which areas probably just be able to understand to what extent, we're able to ask them to what extent do they agree with some of the statements. And you can actually see from all the statements that I may not read through all those particular statements, but from all those statements that we posed to them, the bank assurance agents were able to agree that the technology integration has actually been able to impact the sector significantly. More so when it comes to, integrating, enhancing the access of bank assurance products. You can actually see not less than 90% agreement, which means that in all those attributes, it's to say that we are on the right track, because even those who are directly servicing the customers are able to attest to the degree at which technology has impacted the bank assurance sector. We also wanted to understand that just by their assessing on how insurance sales, on how can insurance sales through bank assurance be enhanced. I think key areas the bank assurance agents believe, and I tend to believe with them, that we can enhance technology or integration of technology is through mobile applications as well as customer relationship management, because majority of customers are actually on mobile apps, and this is just one way we can ensure that we are growing the sector by integrating making the experience of our customers seamless by integrating technology into these particular areas. Of course, some of them others include online policy management portals, automated underwriting systems, chatbots, which probably in the near future is likely to become a big thing. At the bank assurance managers' views, the ICT manager views, the insurance manager views, notwithstanding the views that we've received from the bank assurance agents. Yes, the integration of technology has had impact, particularly when it comes to data protection. We can actually see that there is already a law that actually requires that all the insurance players or the bank assurance players are able to align with the requirements of data security and privacy. So already you can actually see that technology is going on to impact the sector. We also have from the bank assurance agents, I think key areas they mentioned we're definitely facing some of the challenges is when it comes to mobile applications, customer relationship managers, online, policy management, but mostly when it comes to the need for training on matters technology adoption, system downtowns that are definitely associated with technology adoption, integration issues. Of course, we've talked about data security concerns, not to overemphasize on elements of cost implications. Again, and it's very key, and I think as a sector, we can also take learnings from these, key players in the industry globally. We can actually see the element of, the use of digital platforms for onboarding claims management, playing a pivotal role when it comes to customer relationship management and even service provision in Germany, in France, China, India, Malaysia, and even South Africa. You ask yourself, how are they able to grow? It's because they are also ensuring that they are leveraging on digital, technology. Where 1 means not at all compliant and 5 means fully compliant, to what extent would you say your bank complies with the regulations that govern the bank assurance? And overwhelmingly 93% said that they agree that the bank or the intermediary they are attached to or they are working for is compliant. And this is a good sign that indeed the sector is doing well when it comes to compliance on regulatory requirements. We wanted also to understand whether the changes in the regulations have brought any positive impact within the sector. And 82% said yes. In which way? There has been improved transparency, there has been increased consumer protection, there is more innovation when it comes to consumer products within the industry. Just to mention by the top 3, positive developments that we've been able to see from, the regulatory changes that we've been able to see. Initiatives by both banks and insurance. What initiatives are in place? Before we even look at some of the initiatives, I think it's important to appreciate the number of players that are within the sector. And as we started, I think Mr. Gishui was very keen to acknowledge the presence of some of the key players, which include, of course, the banks themselves, the insurance themselves, the regulator IRA, AKI, who are actually the host of these particular functions, the CBK, Technology providers or the fintech companies who play a very pivotal role when it comes to elements, technology, and digital platforms, enhancement. And definitely some of the key players which are very key that you cannot miss within the industry are loss adjusters and the risk managers, actuarial experts, and reinsurance companies. We wanted to understand what is this that actually make either a bank or insurance to say, I want to have a bank assurance product line. What are the motivations? And one of the key motivation we go to to unveil from the interviews we had with the banks, insurance managers, the strategy managers, is that banks engage in the bank assurance mainly to enhance customer experience by offering a comprehensive suite of services that combine transactional banking with risk protection. That is one very primary goal or motivator that we are able to pick. Be a one-stop shop for your customers. Similarly, insurance companies are motivated by leveraging on the bank's extensive customer bases. And of course, we saw the branch networks to expand their reach. Of course, create a one-stop shop for customers that are seeking convenience and a wider range of products.